Shares in NVIDIA hitting a new record high today. They're north of $156. There are, of course, bullish predictions for the AI chip market. And our guest thinks that momentum for NVIDIA will continue. We are joined from Texas by Glen Smith, Chief Investment Officer at GDS Wealth Management. I'm so tempted to ask you for barbecue tips, but let's get into the chip stocks. NVIDIA, I think you wouldn't be a buyer of NVIDIA with new money right now, but you'd be watching out closely for pullbacks.
Absolutely. NVIDIA is a stock in our portfolio, and it's one of our top stocks that we like, but it's very important at what valuations you enter it. A lot of people were concerned that NVIDIA was going to come down a bit because of the restrictions in terms of selling chips in China. But the CEO, Jensen, was just talking yesterday about the demand. They can't even keep up besides from China. So we think it has a ton of room still to grow.
It is amazing because the Wall Street Journal today says that NVIDIA, as it grows, is becoming more and more like a player in cloud computing itself. Of course, that may miff the likes of Microsoft and Amazon, but there seems to be no end to the power of this company.
Yeah, I mean, it's up 15x over the last 5 years. I don't think it's going to fix 15x in the next 5 years, but it still has a ton of room to grow. And it has a moat, right? It controls CUDA, the software that people develop on. So once you develop on CUDA and you use NVIDIA chips, it's extremely hard for a competitor to come in this space. And I think the story is going to change too. Right now, everybody's focused on AI. It's going to move to robotics. While NVIDIA doesn't build robots, it does build the chips, the brains behind those robots. And we think people have been talking about for years, and we think the future is now.
Broadly speaking, you say stocks are not cheap, and for a decisive move upward from here, I mean, the S&P 500 near a record high, a catalyst is needed.
Exactly. Overall, the market we think is very priced right, if not maybe a little bit frothy, a little bit expensive in general. So I'd be very leery to just getting into the market in general. But there's pockets of the market that are priced extremely attractive, certain sectors. So I think for here to continue to go to new highs, we need some type of catalyst, whether it be earnings in July to have some upside surprise. But we have to have a reason for the market to go higher from here.
What about the Middle East? Does that factor much into your calculations? I know evidence shows the market generally shrugs off wars.
So a lot of the fears that we've had this year haven't come into play. You look at the Middle East concern. In fact, oil is back down in the 60s. People are trying to jump the gun and get in oil thinking that the Middle East was going to continue. Now, if the Strait of Hormuz is closed down, perhaps you see oil in the 80s, 90s, but that's not even a talking point at this point. Same thing with tariffs, right? People thought that was going to create significant inflation. That has not happened. You see inflation continue to trend down to the 2%. So I think you want to be very careful as an investor and not just follow the headlines, and because of those let that dictate the investments you go into, because a lot of times these fears never come to pass.
You have some stock ideas for us. Diamondback Energy with that cool stock symbol, FANG.
Diamondback Energy is based in the Permian Basin, the heart of Permian Basin, Midland, Texas. What makes it unique, unlike a lot of its competitors, if oil is just at $60 a barrel, it can remain very profitable. They're returning 50% of the cash flow to their investors in form of a dividend and stock buybacks. And they're acquiring their competitors to continue to grow market share. They bought recently Double Eagle, Endeavor Energy, and they're becoming a bigger and bigger player. And going back to your Middle East comment, right? This is a way to hedge that. If that's a concern, this is a stock that's doing amazing with very low oil. What do you think is going to happen if it gets up to 80, 90, 100? These earnings are just going to grow exponentially.
Another idea you have is JP Morgan. It tends to be the choice for a lot of investors when they're looking for U.S. banks.
It is, and sometimes people will criticize JP Morgan because it's boring. But my response to that is what is the point of these investments? Is it for excitement, or is it to make money? It's up 45% in the last year. Best bank out there, in my opinion, best run bank by Jamie Dimon. Even with the run up it's had, the PE is 13. What I like about it is I think it'll do well in pretty much any environment, whether we go into recession or not. If rates remain elevated at the levels we're currently at, the net interest margins are record breaking. If interest rates were to drop some, while net interest margins might suffer a little bit, we think lending will pick up for residential, for commercial. Mergers and acquisitions typically pick up when rates come down. So we think it's positioned to do well in pretty much any environment.
And then finally, CrowdStrike. What attracts you there to CRWD?
So CrowdStrike is an amazing company. Unlike a lot of its competitors that deal in cybersecurity, they deal with known cybersecurity threats. So they tend to only catch what is already known out there. CrowdStrike leverages AI, it leverages the cloud, so it can anticipate and look for behaviors and patterns that might happen to anticipate breaches. That's different, again, than most of its competitors. It's continuing to grow dramatically. Typically, when companies use them, whether it's small companies or big companies, they add on services to what they do with CrowdStrike. And when you have about 5 services on average, which is what their clients have, the retention is over 98%. So this is a space that, as the world continues to have more cybersecurity threats, we think it's just going to continue to grow more and more.